All right, welcome to Talk Tickers. Today, we're diving deep into Northwest Natural's second quarter earnings. Now, this one's interesting because management came out swinging with a really bullish story. But the market? Yeah, the market wasn't quite buying it. So what's really going on behind the numbers? Let's dig in and figure it out.
And boom, right off the bat, you see the problem. This is what we call a classic mixed quarter. On one hand, you've got this awesome beat on earnings per share. That bottom line looks fantastic. But then you look at the top line, revenue, and it's a miss. So you've got this push and pull, and that's really the central mystery we need to solve today.
And the market's reaction? Well, it pretty much tells the whole story, doesn't it? Even with that really strong earnings beat, the stock actually dipped about 1.5%. Look, it's not a catastrophic drop, but it's a huge signal. It tells us investors are looking past that shiny EPS number and they're seeing something else that's making them a little nervous.
Okay, so let's break it down. We're going to look at the key numbers that made this such a mixed bag of a quarter.
Now, I know what you're thinking. -6 cents per share, that's a loss, right? Well, hold on a second, because context is everything here. For a utility company, the second quarter, the summer months, is always slow. So Wall Street was actually expecting a much bigger loss, somewhere around 16 cents. The fact that they came in at only a 6-cent loss means they absolutely crushed expectations by about 10 cents a share. That is a seriously strong performance on the bottom line.
But, and this is a big but, here's the other side of the story. This is why the market got a little spooked. Revenue came in at $236 million. Now, don't get me wrong, that's up 10% from last year, which is pretty solid. The problem is, it was supposed to be higher. It missed the target by a hefty $16.5 million. And that's the kind of top-line miss that gets investors wondering, is the momentum starting to fade here? So, with all that push and pull, where's the bright spot? It's right here. A massive 10.6% increase in customer growth year over year. For a utility company, that is a fantastic number. This is the metric that management keeps pointing to, saying, see, our core business is rock solid, and our big expansion into Texas, it's really starting to work. All right, let's go inside the earnings call, let's hear what management's story is, and see which parts of the business are pulling their weight. And the message from CEO Justin Palfreyman couldn't have been clearer. He was basically saying, look, everything is fine, we're executing our plan perfectly, and we are absolutely on track to hit our numbers for the year. It's a super confident, unwavering message, which, clashes pretty hard with that little dip in the stock price we saw. So this table is basically the report card for the company's different divisions. And you can see the main gas business in the Northwest did great, pulled in an extra $4.5 million thanks to new rates. The Texas business and the water utilities, they both chipped in positively too. The only real problem area was this other category, which got hammered by higher interest expenses. And honestly, that's a story we're hearing from a lot of companies right now. It's that broader economic pressure, and it's probably a big piece of why that overall revenue number came in light. Okay, so that's the quarter. But what's the long-term game plan here? Let's talk about the big picture strategy management is selling. It really comes down to a 3-step playbook. Step 1, lock it down in Oregon. Get those new rates finalized to make the core business as predictable and profitable as possible. Step 2, go big in Texas. They're pouring gas on the fire down there, buying up companies, and adding customers like crazy. And step 3, keep the finances strong. They're making sure they have a ton of cash on hand to pay for all this growth and handle their debt. And if you're wondering why they're so obsessed with Texas, well, this is it. This is the number you need to remember. Over 217,000. That's not a guess, it's not a hope. That's the number of future customers they already have signed up in their contract backlog. It's a massive, visible pipeline of growth just waiting to be turned on. This is the engine that's supposed to power this company for years to come. So the plan sounds good, but talk is cheap, right? So what should we be watching for to see if they're actually pulling it off? Let's look at the key events coming up. Think of this as your investor checklist for the rest of the year. The absolute biggest one is that final decision on the Oregon rate case. That's huge. After that, you're going to want to keep a close eye on any news about how fast they're converting that Texas backlog, how their financing plan is going, and what's happening with their smaller water utility cases. Oh, and as a little bonus, watch for progress on their renewable natural gas projects. That could be a nice little kicker. Okay, let's land the plane. It's time for our final take, what we call the next call. I'm going to pull all this together and tell you what we think this all means for the stock going forward. So it really boils down to this, a classic bull versus bear debate.
The bulls are saying, hey, look at that massive EPS beat. They reaffirmed their guidance, and the growth story in Texas is crystal clear. But the bears, they're shaking their heads and pointing to that revenue miss as a warning sign about the economy. They see the stock's weak reaction as proof the market is skeptical, and they're worried about the risk of actually pulling off all these big plans.
So after looking at both sides, where do we come down? We're slapping a market perform rating on the stock. Look, that Texas growth story, it's exciting, no doubt about it. But that revenue mess, combined with all the things that have to go right for their plan to work, it just screams wait and see. It's what we call a show me story. They've talked the talk, now they have to walk the walk. But for all you traders out there looking for an angle, here's an interesting idea. Think about a pairs trade. You go long on Northwest Natural, but you short the entire utility sector using an ETF like XLU. The thinking here is that NWN has its own unique story, the Oregon rate case, the Texas growth, that could let it swim upstream, even if the whole sector is struggling. It's basically a bet that this one company's execution will beat the broader market's mood. And that's really the question, isn't it? In a tricky market, do you bet on the herd, or do you bet on the individual?
And of course, just a quick reminder, this is all for informational purposes. It is not financial advice. Thanks for checking out this Talk Tickers briefing.